A lot of things were going on in the markets this week, and despite Friday ending up more than 100 points on the Dow Jones, it really was an average week at best.
Yeah, essentially a flat week. There was a lot of uncertainty about inflation, more talk about tapering, and whether these inflationary spikes we've seen are transitory or not. That seems to be the issue most concerning investors at this point.
Right, so transitory meaning it's a temporary and it's going to pass through, and you can see why the Fed is saying that. For example, the chips shortage, which means that they can't produce enough vehicles, at some point they catch up, that supply chain begins to work itself out. Lumber, for example, lumber spiked 300%, but that number has been coming down. So I can understand why they're saying that it's a transitory issue.
Well, that's the Fed. And, the thing we talked about just before we got on was, Jerome Powell's talking about the United States primarily. And what we're seeing is a recession in Japan. We're seeing slower vaccine uptake in Europe and Asia. And those economies have yet to recover. I can't even imagine what the demand curves will look like once those economies start to see a reduction in the number of people that are diagnosed with COVID and reduced hospitalizations and the like, because the pent-up demand from around the world will be extraordinary.
Yeah, that's a really good point. So that means that this thing could have legs, and that's the reason why we bring it up, is because there's so many questions about inflation and so many questions about where do we go from here, which looks like an elevated stock market. So let's just break those two pieces down real quick. In inflation, there's the number that they're trying to get to, 2% on a symmetric basis, meaning more than 2% for some period of time. But it seems like they're not really concerned about inflation right now and more concerned about their other mandate.
They are. They're much more concerned about Main Street. They want to see wage growth. They want to see the unemployment rate back to roughly 4%, close to the levels we reached in 2019 pre-pandemic. The other thing about inflation, though, is that CPI number was impacted by a lot of very small components that are likely to be transitory. Things like
Let me just jump in, Derek. You talked about that CPI number. The number that we saw a couple of weeks ago, which was a significant number, 0.8% in 1 month, annualized about 10%. Sorry.
Yeah, that's right. And it came from increases in used car prices, rental car prices, airlines, hotels, industries that were completely shut down. It takes a little bit of time to get those industries back on good footing. And the other thing is the Fed doesn't really focus on those so much, but they're much more concerned with things like rents, including owner equivalent rent, and healthcare services. That's almost half the CPI. And those numbers were muted. So as long as those types of numbers remain under control and muted, I think the Fed is probably right to sit on their hands as we await a more normal economy.
And one of the things that especially Janet Yellen looks at as a labor economist is labor inflation. In other words, are you getting paid more? And one of the things that we saw this week, which was surprising, is 21 states have removed that $300 extra unemployment benefit to try to get people back to work because there's such a shortage of service workers.
Right. Right now, I think there's an employment gap of roughly 8 million, of which probably 2 million were making more by not going back to work than they would at work. So clearly a disincentive to go back, and that's other things too. That's, schools remain closed, so many mothers and fathers are perhaps having to stay home with their young children. There's the, fear of getting the virus and that sort of thing. These are all transitory factors and something that we have to contend with as we assess what to do in our portfolios.
That's right. And the Wall Street Journal did a really nice piece about a week ago about what was in that unemployment number, and all of those factors you just mentioned were part of that. But then there was more that people may just not want to go back to work. They got a taste of it, and maybe they're just going to retire. So a lot of stuff to watch, and we're keeping our eye on it, and we do that on a daily basis, as you well know.